Ladies and gentlemen, welcome back for day 5. Good to have you here. We are going to be continuing much in the same vein as we have the previous days. We are working on fleshing out the kind of initial setup of our very first margin calculating spreadsheets. That's the very first stage of setting up your kind of financial analysis department, which is ultimately what we're doing. We're kind of trying to help you insert this function into your business, so actually you've got proper financial data and analysis happening in the background to help you make good decisions. Without a proper analysis department, you're going to be kind of guessing from day to day. And what we're going to do, we're going to help you implement a couple of systems in your business that are really going to help you analyze your data, make good decisions with things like pricing, with things like paying your taxes, and things like your cash flow. So these things are really, really important to actually help you make good decisions within in your business. So that's what we're doing now. That's what we've been doing for the last couple of days. You can see here that we've inserted January, February, March into our spreadsheet, categorizing all our expenses and dealing with our first couple of formulas and a couple of checking formulas as well, just to make sure that everything adds up and everything looks like it should do. Okay, so what we're going to do today, we're going to do April and May. We know what the process is for now. I'm going to do it and show you kind of what I'm doing, just in case anything comes up that may or may not pose some questions. But we're going to keep it nice and quick, keep it nice and simple, and we're just going to rattle through 2 months at the same time. Okay, so highlight your 2 months of data all the way down to the end of May, which we've got here. Copy those, dunk them straight in. Again, remember to format each your bank statements. Mine look a little bit easier because I've done them in advance and I've kind of reformatted them so they're going to fit straight into my calculator spreadsheet. Yours will probably look a little bit different depending on your bank. Most of the time they're all combined into one column. So just split the columns into outgoings first, then income. Doesn't have to be that order, but it does work a little bit easier. Do it in that order and make sure your spreadsheet kind of looks like something like this. And then simple as we categorize each one. So I'll go through those as quickly as I can. I wish there was a way that I could speed this up, but I do these things live. There's no reshoots. I do them live. So you're just going to have to watch me categorize all these expenses. But like I mentioned before, this is all done to help you set up that financial analysis department. Okay, so as part of your business, there's two different avenues or two different reasons why you have a finance department. The first is the common one that we all do and we all have to do, and that's what's known as your compliance. Those are things like your taxes, your VAT bills, all that sort of stuff, payroll, all them sort of things that ensure that you don't have any fines, you're not sort of tax dodging, all these things that need to be done that don't necessarily help you make decisions. You've just got to do them, and there's no two ways about that. You just have to do these things. But what an element of a finance department that a lot of people not neglect but don't even realize that they necessarily need to do is the analysis and looking at your numbers in a way that help you make proper decisions about it. So it's all good having the data there, but if you're not using that and you're not analyzing it, you're leaving so much information on the table that you could be using to actually help strengthen your business. So that's what we're doing today, and that's what we're going to do over the next 30 days. We're going to help you kind of implement that part of your business that will be up and running at the end of this series. So after these 30 days, these 30 tasks, you're going to have this arm of your business that's fully operational and actually helping you make decisions from the very next day. So it requires a little bit of work, as you can see. There's a few things that need to be done to make sure that the function is working properly. There's 30 tasks that need to be done, but once it's there, it's usable almost immediately, and it's really going to make a difference to your business. So it's important that these things get done and they don't get neglected, and you start using them religiously, because it makes a massive difference to your business. The most important thing, I guess, the benefit that a lot of our clients get up front is they can start pricing according to their margins. Every company's overheads and margins are different, so it's really dependent on your company situation as to how you price. You might think what the price you're submitting is a good price, But if you haven't worked out your overheads and you don't know your profit margins, then at best it's a guess, you know. So you don't know if you're covering all your costs and then having money for yourself at the end if you're not including everything in your margin. So a good example is you buy your materials, you price them up, you add a small margin on it, you price the kind of day rate up and you add a small margin on it, and then you add your profit on at the end, say 10%, whatever that needs to be. Whilst that is a standard way to do it that I know a lot of people do, it's not necessarily the absolute best way to go about it. It's in the wrong column there, so change that over. It's not absolutely the best way to go about it. So you miss things like, you know, if you've got storage or lockup, or if you want to invest in machinery and plant, or if you've got accounting bills or marketing bills or whatever it is, those also need to be built into your margin. So if you're pricing up based on materials and labor plus a markup plus a profit, the things that are going on in the background, your professional services and, you know, any office staff that you've got, any phone bills, anything like that is part of your business, those aren't included in your pricing, and they need to be. Without those in your pricing, you are effectively leaving money on the table, and that money that you think you're making as profit is actually being eaten up by your expenses in the background that you're not including in your pricing. So by working out your margins, which is what we're doing here, you can include those things. Again, this exact one that I'm putting in here is your interest payment on your loans. Those won't be included in your pricing. So they need to be. So if you've got these costs and expenses that are part of running your business, then you really need to make sure they're included in your pricing, and this is going to give you that ability to do that. Okay, so we've categorized all of them, a lot of expenses in the last couple of months. So what we're going to do is we're going to expand these formulas, and we're going to make sure that every material cost is included. So you can see here, total outgoing, so that column is now has tracked that, and it's now 34,555, and the total of the categories is still as it was. So we need to make sure that that number here matches the number above. So we go down to April, and then we just are adding a plus sign up here, then clicking the box that has materials next to it. Okay, so anything that's categorized as material, then we hit plus sign again, materials, and we just do that for every time it says materials. Okay, so no matter what, even these small costs, they need to be built into your margin. So if you're, you know, £10 of extra slabs here, £10 of extra slabs there, you know, whatever it might be. If you're just these small little bits, they kind of add up, so they also need to be included as well. So if you've priced up for a certain amount of materials and you end up needing some extra, you need to make sure they're included as well. They're not negligible expenses. They exist and they need to be accounted for. So you need to make sure every material transaction is included in these margin calculations to make sure that your margins are staying consistent and your margins are actually making you a genuine profit when everything's included, not just your materials and your wages. It's the fact that everything needs to be included. Okay, so that's our last materials cost. Boop. So that'll go up. VAT, there was a VAT bill paid in May actually, and it was quite a big one. So that was towards the bottom. VAT, there it is. That'll make that a bit more significant. Yeah, up to 10% now. Obviously that will readjust now. There's no personal tax bills paid. There was a bit of owner's pay actually paid out. So this is the first time this company has taken some money out. So what we need to do is make sure that that's included. So it's the most common formula that you'll need, I think, across Excel. I've been using Excel for years and years and years. And the equal sum is by far and away the most common formula that I use, even now. So equal sum, anything next to an owner's pay box, in it goes. Okay, so there's one there, there's three separate occasions where the owner of this fake business paid themselves. So in that goes, that'll adjust your margins for your own wage, which is now looking at 4.5%, which is nice. There was no tax, there was no profit, which is fine. Wages, there are obviously a little bit of wages across 2 months. So again, add the plus sign, scroll down to March. No, April we started from today, didn't we? So any wages, scroll down till you see it, and then add that. So click the box, add a plus sign, click the box, add a plus sign. Any more? There actually wasn't a lot of wages this month, which is fine. A couple more at the bottom there. Bush. Okay, so that's that done. And obviously the big one, So you can see as there should be somewhere around £2,500 of expenses that month. So you see here, this box up here is absolutely massive because there's a lot of little expense transactions that add up. There are easier ways to do this, but this is a way that will make the most sense. So add a plus sign, click the box with anything next to it, with the expenses next to it. So this will take a little while we go through it all. Again, I wish I could speed this up, but this is all just recorded live and in one go. So it's a lot of me just doing it as we go. Plus, remember to put the plus sign in between it, otherwise it won't work. So hit the plus sign, click the box that you want to include, and just do this for every time there is something labeled as expenses. There's a couple there. Yeah, so this month, of course, we're still only just in May, so there's a lot of expenses this month. All little things that'll all add up that you need to be including in your margins. So things like fuel, things like stationery, these are all things that you probably take into account when you're pricing. But actually, when you break it down and look at it, is this actually being included? You know, what are your expenses margins? By the time you've run your business, and by the time you've, you know, I don't know, paid for meals out with your staff, whatever it is that you do, you know, these things don't just go away. These things need to be included in your pricing, because at the end of the day, the reason why we're in business is to make a profit. And if you've got a 20% profit margin, which sounds great when you're pricing up, if that doesn't include all your expenses and things like eating out and your fuel bills and insurances and loan repayments and whatever else it is, you're going to find that profit margin is very quickly eaten up. And there's actually then, when it comes down to it, just nothing left for you. So that's the last of the expenses. Let's add those up, let it do the calculations, and good. That's always a relief when we see that. Those two match, which means we've included every single line of that, of those 2 months. Okay, so as we can see here, the margins have readjusted again. We've got materials margins sat at about 40%. So 40% of expenses goes on to materials, 10% onto VAT, nothing for profit, which will likely be the case for a lot of businesses. Owners pay, the owner's taking about 5.5% of expenses out of the business. Tax at 0.4, which is obviously just one small personal tax bill. Then you've got your wages bill at close to 8% and expenses at 36. So you can see materials and expenses, depending on the time of year, they'll always be your number one and your number two, but it's just exactly what kind of margin they work out as to help you out with your pricing. So that's today done. I hope that made a lot of sense. I hope it wasn't too boring watching me go through a couple of months worth. But you know, what I'll try and do is, as I'm going through them, I'll just try and explain the reason why we're doing what we're doing. So we're actually on May now, so we've actually got 6 or 7 more months to do. So it might take us another couple of days of doing it. So if you're comfortable with it, just go ahead and crack on, get those done. So what we are doing over the next few days is we're just doing every single month of the year, and what that's gonna do is give you like a seasonal idea of what these margins are going to look like at the end of your year, and that's kind of what we're going to work from going forwards. So go through the whole year if you want. If not, just do it day by day with me. I'm going to be doing it at the same time as you, so I'm not going to leave you high and dry. I'll be doing it with you. But yeah, if you want to steam ahead, if you're a high flyer, go for it, get it all done. But if not, feel free to check back in every day. I'll be putting a video out every day as normal about and just going through this with you. So I'm doing this at the same time as you are as well. So thanks again for tuning in. It's day 5. Day 6, 7, 8 is probably going to be the next 3 days. So that'll be the end of this week. So Wednesday, Thursday, Friday is when I'm recording this. That'll be done, and we'll get this full margin calculator spreadsheet finished, and that'll give you our first bit of reusable data. And then I will then show you how to use that data even a step further and actually begin using that as a pricing tool within your business. Okay, so I'll see you again tomorrow. Let's get cracking on with anything we've got to do today. I'll be back tomorrow with a few more months worth of calculations, and hopefully, like I said, I can give you a bit more information as we go. Any questions in the meantime, wherever you've seen this, if you've seen it on YouTube, if you've seen this on Facebook, just drop me a message, drop me a comment. Any questions, I'll be happy to help. But if not, I will see you tomorrow. All right, cheers, guys.